This was exactly how I deceived the bank. This is exactly how I trapped the bank. This is exactly how I made enough profit today using this simple strategy. Now follow me, let me show you. Guys, today I'll be teaching you guys about what? Bitcoin analysis. Bitcoin analysis. Alright? Now, in our previous class, I told you what market structure is, how to identify other block fair value gaps, how to identify liquidity and inducement, which is exactly the strategy that the banks would use to take what? Their trade or enter the market. Now, in Bitcoin analysis, I will teach you exactly how to analyze Bitcoin starting from the daily time frame, down to the what? 4-hour time frame. Alright, just follow me, guys. Then we'll have what? 1 hour what? Time frame. Alright, now I will teach you how we navigate through these 3 time frame and get a solid what? A+ setup. Now guys, do you understand how trade is being taken on the daily time frame? Now let me show you. First of all, on the daily time frame, you look for what? Bias. When I mean bias, I mean what? The direction of the market. You want to come to a conclusion, like saying, where is this market actually heading to? Are we bullish? Are we bearish? Or is the market consolidating or ranging? These are questions you ask yourself on what? The daily time frame. Now please, before we proceed, if this is your first time of coming across our channel, please do well to subscribe and hit the what? Notification bell. This is so that you stay active whenever we upload content such as this. Okay, thank you very much for that. Now let's proceed. Now on the daily time frame, I said we are looking for what? Bias. What is bias? The direction of the market. The direction. Are we bullish? Are we bearish? Or is the market consolidating? That is what you check on the daily time frame. Now let me take you to structure. For example, we have this kind of structure. All right, we have this kind of structure. The market breaks structure to the upside, breaks structure again, breaks structure again. This shows that what? The market is what? Bullish. We are not ranging. Okay, we are bullish. All right, this is exactly what you want to see on the daily time frame, even if it's just one. Okay, even if it's just one break of structure to the upside, we just want to see a clear break with a good swing. All right, a clear break of structure with a good swing in the daily time frame. Sorry. Okay, you want to see that, you want to spot that in the daily time frame. Once you have spot that in the daily time frame, you mark it up, and then we'll go to the what? The 4 hour. In the 4-hour time frame, we want to look for what? Demand zones. Now in our previous class, I told you about what? Demand zone, and I said something about demand zone. I said demand zone are area where we are looking to do what? Buy the asset or buy Bitcoin. Okay, demand zone is area where we're looking to what? Buy Bitcoin. So you need to spot what? Demand zones in the what? 4-hour time frame. That's what you do with 4 hours. Remember, I just said daily time frame, we look for the what? Direction of the market. That is the bias of the market. If it is bullish, if it is bearish, or if it is what? Ranging. Okay, we don't trade ranging market. If it is ranging, just maybe stay away until the market is what? Very clear. So here in this, for the sake of this class, we are assuming that what? We are what? Bullish on the what? Daily time frame. So after you find out that you're bullish on the daily time frame, you go to the 4-hour time frame to look for what? Demand zones. Demand zone are area you want to buy. Now, for example, we are bullish here. In the 4-hour time frame, there's something we call internal structure, like this move that creates this break of structure in the daily time frame. There is a small move inside of it, like this, but you will not be able to spot it on the daily time frame except you go to the 4-hour time frame. Then you can see what? The small what? Move. That is called what? Internal structures. Okay, so let's assume that we are able to spot something like this in the 4-hour time frame, break of structure to the upside. This is what? A demand zone where we are looking to what? Buy the asset. So you wait in the 4 hour. Once you are able to mark out your demand zone, you do what? Just wait and relax. Okay, you can, some person set notification alerts here, so that once price just tap into this zone, you get notified on your mobile device that yes, price has just tapped your demand zone. Once price tap your demand zone, what is the next thing to do? You now wait to see confirmation in the 1 hour time frame. Now 1 hour time frame is what? For what? Confirmation. Alright? 1 hour time frame is what? Confirmation. Now what is the confirmation we're looking for? Once price comes to your demand level, you want to see something like this. You want to see that price go up, sweep liquidity, create change of character. Okay? This is value change of character. This become liquidity sweep. This area, there should be fair value gap that cause what? This displacement, making the other block to be what? Valid. And then here you can take your what? Long position. Alright? You can take your long position. So by waiting for what? Liquidity sweep, inducement being created, fair value gap, you enter the market. That is what? How the banks trade. This is how they enter the market. The bank does not enter the market except there is what? A liquidity sweep. Alright? They want to make sure that a liquidity has been taken. Alright? Inducement was first of all placed before liquidity, because once inducement is placed, retail traders like me and you take trade feeling that yes, we are ready to move, and they will place our stop loss below there, and you see the bank manipulates the trade and what? Sweep the liquidity to exchange their orders before they what? They take their what? Buying position. Alright? So when you understand liquidity sweep and inducement, you understand the traps that the banks are setting within this range. So you know how to avoid it, and you know exactly when the bank is ready to what? To enter the market, and then you do what? You click the buy, you follow them, and then you flow with the big boys. Alright? So that is exactly how the banks enter the market. Please, if there's any question and you feel that there's something you don't understand concerning just Bitcoin analysis, I just explained to you. This is not a chart. Alright? This is not a full chart. This is just explanation what we do in these 3 time frames. In your trading view, in your chart, you go to the daily time frame, 4 hour and 1 hour time frame. So in the daily time frame, we look at bias and direction of the market. In the 4 hour, we look at what? Demand zones that are unmitigated. These zones should be unmitigated and must have a fair value gap. Alright? Then in the 1 hour time frame, you look at what? Confirmation. When price comes to that zone, you want to see liquidity sweep, value change of character, inducement, fair value gap, and then you take what? Your trade. So that is it, as simple as that. These 3 time frames are very, very important, and then this is execution time frame. So that is it about what? Bitcoin analysis broken down. So if there's any question, please do well to message or comment, put it down on the comment section. I will look at them and then I will answer your questions one after the other. Alright, so thank you very much for following us up to this time. I love you very much, and do well to like, subscribe and share this video. Thank you, and God bless you. See you in our next class.